Yes, a brand new trading week is getting kicked off right behind me here at the New York Stock Exchange. An abbreviated trading week here in the United States, with the markets closed on Monday for the President's Day holiday, but still a busy week nonetheless. And after last week, investors still trying their very best to see if the recent downturn will continue or if we will see a reversal of fortunes. Yes, U.S. stocks, they closed lower on Friday and booked the second week in a row of declines as investors kept an eye on Russia and Ukraine, fearing an outbreak of war. Ongoing tensions between both nations continue to drive the market action. The Wall Street Journal reported on Friday that U.S. officials expect an attack from Russia in a few days, and President Joe Biden now expected to move more U.S. troops closer to Ukraine, according to NBC News reports. Now, for the session and for the week, the Dow Jones fell about 232 points on Friday, or 0.7%, marking a 1.9% weekly loss. The S&P 500 narrowly avoiding a close in record territory on Friday, losing 1.6% for the week, while the Nasdaq shed 1.2% on Friday, losing 1.8% for the week. But now it's time to look ahead. What direction will the markets move in? Will we see a continuation of the slide or a little bit of a bump up? Let's now take a look at what will likely move the markets in the week ahead. Now, we first kick off the session in China with the People Bank of China's interest rate decision. That's a rate that currently sits at 3.7%. Meanwhile, in Europe, we have market services PMI in the nations of Germany, France, throughout the EU and the UK. While here in the United States, the markets will be closed once again for the President's Day holiday. Now, Tuesday sees the return of U.S. data with the release of market manufacturing, market services, and market composite PMI reads. In addition, the S&P Case-Shiller Home Prices Index, that's due out. Expectations call for a read of 18%. Now, Wednesday sees us back overseas, first in New Zealand with the RBNZ interest rate decision. Expectations call for the rate to rise to 1% from 0.75%. Meanwhile, in Germany, GfK consumer confidence, that awaits. Expectations call for a read of negative 6.2. Thursday kicks off here in the United States with preliminary fourth quarter GDP. Expectations call for a read of 7%. And then on Friday, we have ourselves a busy session. First in the United Kingdom, February UK consumer confidence awaits. Expectations call for a read of negative 18. And then it's off to Germany, fourth quarter domestic GDP due out. Expectations call for a read of negative 0.7% quarter over quarter, 1.4% year over year. Then it's back to here in the United States with the release of the January durable goods orders, that of which is expected at 0.6%. Now, don't forget to keep an eye on geopolitical tensions, especially between Russia and Ukraine, that have been moving the markets as of late, as once again there are reports saying that an attack is imminent, so expect the markets to react as well if that does indeed happen. And until next week, live from the New York Stock Exchange, I'm James Sweeney, reporting for ICF.